Mr. Kamakodi is now joining with us. City Union Bank is in focus. What has exactly happened over there? One of the brokerages last week, a few days back, put out a note, their inference and reading of how the QOQ growth of City Union Bank would be. Mr. Kamakodi, good morning. Thank you so much for your time. I'd just like to put it on record that last year we saw there was a very meaningful correction in your stock happened because you came upfront and said probably the growth from here on would not be, you kind of tapered down the growth expectations of the market from your bank, and rightfully so. After a few quarters, you came back and said that the things are looking upward. Now this note which has come out with one of the brokerages saying that QOQ growth at your end perhaps would be flattish versus what the street was estimating 5.5% earlier. So I want to understand from you, where do we exactly stand right now on the growth cycle? Because I really appreciate nobody comes out and says that, look, we are going to grow slower than what we had estimated earlier, but you did it about a year back. And then you came back and rescaled estimates back. Where do we stand right now? If you could clarify.
See, basically, I would like to give you some background so that you can understand how things move and what is the basis with which we are giving you the expectation. Right from the beginning, growth versus profitability, our focus had more on profitability ratios. We had decade plus where we had a CAGR of about close to 15% in the past, and when the even before the COVID hit us, in fact, we said that some things were not okay, and so we were downgrading the growth. But subsequently, during the COVID period, we managed the growth with the gold loan and ECLGS and all. We were able to get our growth back on track, and we had certain things we need to change. Basically, the lot of growth currently in the banking sector, we were focusing purely on the growth through branch network, and we had focused ourselves purely on MSME, commercial trading, agriculture, and gold loan and all. And recently, the bulk of the growth rate has been happening through the particularly the higher exposure to NBFCs, co-lending, particularly with the fintechs and things like that. We had been little slow, so that we want to understand the risk and take it forward, and that's why we scaled down something, and we also had some observations from the regulatory side which are behind us. So coming to the next side, we had to start basically with the loan origination systems upgrade and all. All those investments and all are currently on that, and we said we should be having about close to 12 to 14% for the current year, and there are certain headwinds, particularly on that and all. Even still, that we are taking our complete steps on that. But we had clearly told that we will be for the first time getting back to the 4-digit profitability figures, and all our return and profitability ratios, around 1.5% plus ROA, and all such things which got affected during the pre-COVID. All these things are already back on track, and we have demonstrated, and the growth is the last metrics we have to get back. We are on the job, and it is happening in stages. It is very, all these things, whatever we are doing, are to take bank for the next 5 to 10 years. Basically, certain capacity building and other things which need to be done are being done on technology side, on processor side, and things like that. So it's a process with which we had and some amount of plus or minus had been there here and there, but overall we are on track, and we feel we will be we are almost on all parameters. We are back to our best of our times, except the growth, which we should be able to demonstrate as we move forward. This is where we are.
All right. So thanks very much for that clarification. Let's just understand then, going down the line, what's the outlook in terms of your guidance? Are you going to stick to that 12 to 15% FY24 growth guidance? Any upward, downward revision? If you could just walk us through the details.
We still continue with our profitability growth guidance. Whatever we said, for the first time, we will be getting into the 4-digit profitability figure, and we have crossed half of that in the first half. We are sticking into that. The exact growth guidance, we are by and large there, and we will be able to share the exact numbers when we share our Q3 numbers when we will be giving where we stand. And even though there are certain headwinds here and there, we are putting our best effort to achieve those numbers, and the exact numbers we will be sharing.
All right. And what about the deposit repricing? Is that now behind us? Can we expect your margins to stabilize or perhaps even build up and improve from here on?
Yeah, if you had a chance to look into, say, our last, let's say, even 40 to 50 quarters, 80% of the time we used to be around 3.4 to 3.7, and about the 20% we were above 4% and all. Some of the factors, like say, we used to operate at about 88, 89% credit deposit ratio and all, which we had to scale down to 80 to 83% subsequent to the developments that happened after the pandemic and all. And we had to particularly about 20, 25 basis point below 4%. We were at about 3.7, 3.8%. We said our range had been the like say the whatever we had in the last quarter around the same thing we should be able to stabilize. By and large, the repricing of the deposits is over, and hardly maybe about 10-15% repricing may be sufficient, and margins have been by and large stabilized with maybe 5-10 basis point here and there. It had moved on to the narrow range whatever we had already demonstrated.
Mr. Kamakodi, great to have you on the show, and thanks as always for those clarifications and the candid chat.